Good morning, everyone. We're going to be going over quite a few things in this video since it's going to be the Sunday video. They'll be going over basically all the data sets for the week, any earnings, any important things that I should be covering for that week. So with that said, um, I'll I'll make sure to timestamp everything in the video, but we'll be covering it in this order. So we'll go over the data sets for this week. We'll be going over the earnings, which ones I feel are important or not. I want to talk about the tariffs after, so I want to go into basically what my thoughts are on it and what we know about them so far. And then I want to go over my spy expectations, and I also want to go over what happened on Friday as well, because I know that many got caught out on that major sell-off. So I kind of want to discuss what I saw leading up to that and getting into the data sets for this week. So for Monday, we have the PMI for the manufacturing, or the manufacturing PMI. So that's the Purchasing Managers Index. That goes over 400 of the top companies, and they discuss their end basically. So from production to manufacturing, supply, not so much the demand side. It's more of how they're seeing their side. So for Monday, we'll be going over the manufacturing side of that, as well as the ISM manufacturing data. Nothing I'm looking forward to too much in there, but those data sets can definitely lead to some certain outcomes in the SPY, either up or down. So just be aware that's all coming out at around 9:45 to 10 a.m. Eastern Standard Time, of course. Tuesday, we have the JOLTS data at 10 a.m. Uh, Again, not really looking forward to anything too crazy in there. We have been seeing this moving down over the last few months, so let me see. Yeah, this has been trending downward since 2022, and just recently, the last couple months now, it's been picking up. So a lot of people are looking at that to see if that's going to continue trending upward or if we're just seeing a bump in the curve right now. But that's pretty much for Tuesday. So for Wednesday, we have, let's see, we have some of the NFP data, some PMI data, nothing too crazy. Again, these are all still important data sets, though. Uh, Not the crude oil inventories or this Fed speaker too much, but the ADP non-farm employment change can be an indicator to the non-farm payrolls on Thursday, I believe, or Friday, whenever it comes out. I'll check in a second. But this can lead up to a lot of things, so just be aware that, that is a lot of data coming out again around 8:30 in the morning to 9:45, 10 a.m. Uh, Eastern Standard Time, of course. Thursday, it's mainly just the weekly jobless claims. Not looking forward to anything too crazy in that. They are expecting an uptick. Uh, the continuing jobless claims, they did expect a downtick, but again, that can go either way right now. We've been seeing data sets kind of skewing both ways, either extremely high or extremely low on the jobless claims and the hiring end. So we do know that the hiring has been coming down quite a bit, and that does move hand in hand with the jobless claims just a bit as well. And Friday is when we have the really big and important data sets. So that's when we have the NFPs, which is the non-farm payrolls, the unemployment rate. We have a Fed speaker at 9:25, so that's basically right as the market opens. Then at 10 a.m. we have some smaller data sets, but those have still moved the market in the past, which is the Michigan inflation expectations. Other than that, I'm not really looking forward to anything too crazy out this week, but we do have a lot of the job data side. Um, yeah, a lot of that job data coming out this week. So we'll be going over those as those come out each day, of course, but just in the grand scheme of things, uh, basically just job data. With that said, let's go ahead and hop into the earnings for this week. So let me get that pulled up. So for the earnings this week, tomorrow or today, Monday, after close we have PLTR and NXPI. Those are both pretty big tech companies, so those are both uh, can move the market quite a bit. Uh, I'm not really going to talk about which way I'm leaning for any of these earnings, as I'm not really too earnings focused in terms of like taking contracts or setting up a play for earnings. But um, again, these two are two big ones. For Tuesday, we have PayPal and Spotify. That's for the pre-market. For the after hours, we have some big ones. We have Google, and then we have AMD. We also have Chipotle and Snap, but Enphase as well is actually pretty big. I've played Enphase quite a bit, and it's a good mover. Um, so wouldn't play Google as much. I really don't like playing the Google earnings. For Wednesday, we have Uber, Disney, NVO in the open. I might play NVO just because we've been trading that recently, but not looking forward to Uber or Disney too much. For the after hours, we have Qualcomm, we have ARM, Master, Ford. Uh, I know a lot of people are looking at Master and ARM. We'll probably play something on ARM. We'll talk about that probably tomorrow afternoon, so we can work on some contracts for that one. And then for Thursday, we have Lily, in the open. Not really looking forward to anything else too much. And then we have in the after hours, we have Amazon, uh, and then Elf. Not really looking forward to too much. Some play Affirm. Um, Microchip can move the market a little bit, but I'm not really expecting, again, too much out of that. Basically, it's going to be either Google, AMD, Qualcomm, ARM, or Amazon that's really going to make any impact on the market for this week. Now, I wanted to go over some stuff on the tariffs really quick just because a lot of people have been discussing it and been kind of speculating over whether it's going to be helpful for us or not. So, um, I just want to cover a couple of my notes that I've written about this, and I'm going to be as non-political as possible, so just take everything from an analyst point of view instead of a political point of view. So one thing we do know about Trump's tariffs is that uh, Trump usually tries to stick to his word for the most part, and um, whether that gets passed or not is a different story, but he does try to stick to what he wants to implement, and he has been talking about tariffs on pretty much the entire world right now. So for Mexico and Canada, starting, I believe, tomorrow, the 4th, we'll have 25% blanket tariffs on pretty much everything on in Mexico and Canada. Uh, he did say he may exempt oil, gas, or anything else. I don't have the exact quote, but he said almost, or he said something to the words of, if the deal's good enough, then we may exempt whatever it is. So that could be oil, gas, water, whatever we're purchasing or, you know. Now, some of the interesting things about these tariffs is that they might start at 25%, but they could go up or down. Trump did specifically say that if the tariffs start working as they intend and, these countries start working with us a little more, then they might go down. If they don't, then they might go up. We've seen from Canada and Mexico that both of their presidents have said that they want to put tariffs or retaliatory tariffs against us as well. So Trump did say that if that happened, he would increase the tariffs we are putting on them. So uh, just we have to kind of take that day for day. But uh, I do expect that these tariffs are going to last for quite a while. And the reason why is that he and by he I mean Trump, um, President Trump said that he was looking for basically about 250 billion from Mexico and Canada over the next year. So that means he has an actual monetary projection in mind with these tariffs instead of just throwing a tariff out there just to aggravate people, if that makes sense. So I think he's actually wanting to stick to a target with these to accomplish, actual monetary goals. And if he is doing that, then these tariffs are going to last for quite a while. And whether that's a few months, 6 months to a year, I don't know. Nobody knows right now, but uh, we can't expect them to last a few months, I would assume. China has a 10% tariff going on it, but that could increase. Uh, but more than likely, it's going to be a 10% blanket tariff. And just to quickly cover what a blanket tariff is instead of going after basically like a specific company or a specific product, you rather just go after the actual entity or the government entity itself, which targets everything under that. So any company under that classification. So basically, if I'm a company in Canada and I there's a blanket tariff on Canada, well, that's going to increase all pain on Canadian companies and the like. So um, that's a little different compared to a tariff just targeting specific sectors or specific companies where it's not as painful. It's a lot more uh, manageable by the government and any business entities. So blanket tariffs are good and they are less punishing on our people because they generally lead to, um, since it's less targeted in whatever it is, it's not going to cause such a specific target on that product to increase or decrease compared to it just being a blanket, covering the vast majority of products. Um, and when it covers the vast majority of products, the government generally has to step in and whether it's increase inflation or whatever it is to handle that tax or that monetary burden. So that's kind of what I see for the tariffs right now. Again, we kind of have to prepare for the long haul, but it can go either way. I apologize if you guys hear my cat right now. Um, but don't just assume that this is a overreaction by the market. This can absolutely be a very real thing that can last for quite a while. Alright, so let's go over Friday real quick. And let's go ahead and jump down to the 1 hour chart. Actually, I want to move to the 5 minute chart because that's what we were discussing in the class on Friday. So here's where many people got caught, and let's really take it for the day as it started. Let me see if I can get my chart a little bigger. There we go. Okay, and I think I actually got my drawing tool to work this time. Drawing tool, okay. Alright, it's not gonna look pretty, but you guys will be able to see it. So, we had the pre-market start. Let's see. Where's the trading session? Just wanted to only show that trading session. Okay, well, the trading session started from right there to right there. So, I know what many saw was first this cup forming. So, many bought calls on the very bottom of that cup, and we were able to ride it all the way to the top, right there. Many took, profit on their calls right there. That was a great opportunity. Those who didn't saw this cup form at the bottom But this also could have been a head and shoulders. So if you see right there, it's not going to look good, but there was a head and shoulders there to pull it down. And what that did was this formed this cup. Now, the problem with this cup is that, well, there's a few things. The top of the cup didn't reach, so as you could see, it hit this 610 area and on that first one, but the second one only hit the 609.80 mark. It's not showing the 610 candle right here perfectly. That's because I'm on the 5-minute chart instead of the 1-minute chart. But basically this cup didn't close. And when that cup didn't close, we didn't get a proper handle downward right there. So when that started to form, that handle, many were buying calls, assuming that this would break out upward. Instead, what we got was, again, just another head and shoulders downward. And, again, that took us all the way down to the bottom of the day, right? Um, we need to be really careful with handles because if we were playing this as a standard cup and handle anyway, we would have started taking puts at this area and um where's my mouse going? We would have started taking puts at this area regardless, um whether that was a bullish structure or bearish structure, because again, this is the top of the handle. We would take puts into the cup to get to the bottom of that handle for the breakout upward, right? For that breakout upward. And if that doesn't happen, then you get this massive room downward. Well, people who took puts there had a really, really great play. You guys saw basically a whole 9 points play right there. Um, and I know that's just where the majority of everyone got caught. And I actually wasn't trading at this time. I was still sick, so I basically had all my contracts placed up here and had some hedges, but nothing crazy. Went to sleep, woke up, and I think the market was like 10 or 603, something like that. I bought some contracts right in here. I have some 603 hedge puts going, and that's the story of Friday. But let's go over what we're looking at for the day. So, quickly going over this week, we see that the market is quite below the 5 mile. The 5 mile is currently at 602. It'll probably open at around 601.90 just because we saw the SPY actually close at 601.82. So it could be anywhere between that, basically where we closed and where the 5 mile is now. So that's why I'm assuming that 601.90 area. It might be low 602, could be higher, could be lower. Just have the expectation that it's going to be in that 601.90 area. The 10 mile is actually above the 5 mile, so this is the first bearish indicator we have that this could be a possible trend change. And if we don't close today above the 5 mile, then again, the 5 mile is going to pull downward towards the 20 mile, and this is going to help solidify the bearish trend change, but we're not entirely there yet. This is only the first step. We have to wait basically until the 5 mile crosses the 20 mile before things start getting extremely bearish. We have the 20 mile at the 595 80 area right now. Very likely that's going to open upward towards us, uh, just because based on where we closed and everything, but it could open downward as well just because of where we're going to open. So I'm not entirely sure exactly where that's going to be. It could be closer to that 596 area, but it could be lower as well. Um, and then we have the lower Bollinger, which is at the 577 area. We're still really far away from that, so I'm really not looking towards the lower Bollinger right now. If we are going to build towards that, then we will probably test the 20 mall, reject the 20 mall, test the 5 mall, reject 5 mall, then head down to the bottom Bollinger before, we see such a drastic move. Um, on the daily chart, we do have the ADL, which is basically the money flow. So again, if you see the ADL moving downward, you can assume the money is leaving the fund. If the ADL is moving up, then money is entering the fund. This is a pretty large downward turn in the ADL. So currently, we're seeing actual selling going on. And one thing I do know for March or February and March in general, they are usually fairly weak months, so this could be a decent time for a larger sell-off to occur. Just be prepared for that, just in case. I wanted to go to, let's see, I wanted to go to the 4-hour chart, and let's turn off the Moz and the Bollinger. So this was a structure we're covering for, quite a many weeks now, and that was the inverse cup and handle right there. And that played out really well. We saw the second top, we saw the handle basically test the buying channel or the selling channel top and reject, come all the way down, and now we have two large selling channels. Let me go ahead and pull this out just a bit. So we have, I want to delete this head and shoulders really quick, or the cup and handle. We have many charts here. I'm trying to get this scrolled out. Let's move to the daily just for a second, just so I can better show you these channels that I'm looking at. So we have two major selling channels, or two micro selling channels right here. This purple one could be a major selling channel if it continues outward, but we do need to see this play out a little more. I wanted to show it to you in the daily channel just so that you can have a larger view. It's not very clear though, but there are two different channels here. And the reason why we know that is because, as you can see, there's a very defined resistance or support line here for this first channel, which, we're going to keep that one as the blue channel for now because it's a little weaker. And then we have this much more defined selling channel, which is, the entire structure of the larger inverse cup that we had basically, in early December. But I want to head back to the 1-hour chart and just quickly go over what I'm looking for structurally. So I want to turn off the drawings, just so that you all can better visualize this. Sorry, I'm still trying to get used to navigating how these charts work on the computer. Alright, so we did have that blue selling channel, which did cover the very bottom of this. If that channel's going to hold, then we're going to start seeing some buying occurring right in here. And what I'm going to be looking for is for the 20 MA to be tested. So what we'll be looking for is some sort of not bearish, but bullish structure to form here. And that could be an inverse head and shoulders, a cup and handle, just something that's going to grab onto that 20 MA, hold it as a support, and then finish filling this cup upward. So we want to see all the selling close and buying occur all the way to the 609, 610 area. Basically form a new cup there and close that. If that doesn't occur, I still want to see very likely a 20 MA test happen and that reject downward again. And that rejection has plenty of room, right? If we're going to reject right here, we still need to consolidate first. So again, this is one example of that consolidation. So we have this first sell-off, and then we pull back up. That was enough consolidation within to sell off again. So very likely we're going to pull back up. Doesn't mean all the way to the top here, but we could pull back up, test this area again for support and reject it, pull back down, and again hold this very strong selling channel. Now, if we're going to see some really deep selling, we do have the bottom Bollinger at the 577 area. If we start selling down towards it, the bottom Bollinger will move downward more. So again, that's still going to take quite a lot of structure to actually build towards that. So what I mean by structure is that each time we test a level within the Moz and the Bollinger, so say for example, we come test the 20 mil, we have to test the 5 mil usually after, and then after that 5 mil test, we either test the 20 mil again, or we go to the bottom Bollinger. So we still have quite a whiles away before we see a significant sell down to that bottom Bollinger, at least from my opinion. Uh, I still am not fully set that this is a major selling structure. And overall, we should see not a super volatile week, I don't think. I think we're going to see more consolidation than anything, and very likely that consolidation is going to be upward leaning rather than heading downward. But again, we just need to stick to our supports. We have the 5 mile to navigate, and we have the 20 mile to navigate as well. So we just need to look towards those areas and see if they decide to take that as either support or, a resistance to continue heading downward. Now, just quickly going over NVIDIA. Let's see, I want to go to the daily chart. Just want to check if it's at the bottom Bollinger yet. I don't know why that drawing happened. Okay, so the video will be at the bottom Bollinger because it's currently at 113, 82 in the overnight session. So this will be bottom Bollinger day 1 again. So I will not be buying calls until the second day, bottom Bollinger day 2. We should be looking for lower lows into that move, which also means that in the SPY and tech, we should be also assuming that we will see lower lows within the next 1 to 2 sessions here. So if we are going to see a inverse head and shoulders build here, then very likely we're going to see the left shoulder, the head form towards this bottom consolidation channel, and then the right shoulder form into the breakout. If we're going to see this break down more, then very likely they're going to use this upper consolidation channel to bounce off of and reject and push down towards that bottom consolidation channel. And by the time we get there, that's very likely where the bottom Bollinger would be if we are, again, heading down further. So with that said, I wanted to talk more about how to properly hedge this type of price action. I know that many people are not used to tariffs or anything else like that. Granted, I'm not either, but I want to do a much longer video either today or tomorrow discussing that because there's many options from VIX, volatility, bonds, TQQ, SQQQ. There's so many different options and equities you can take to hedge your portfolio. So we'll talk about that. And I also want to talk about TLT more in depth too. So that's either going to come out today or tomorrow. Again, I'm just not feeling too well still, so it just kind of depends on when I feel good enough to actually get around to recording it. Other than that, this video has been pretty long, so I'm gonna end it here. I hope you all have a great day tomorrow and this week, and trade safely. I will talk to y'all later. Night.